Hello, good afternoon, everyone, or good morning or good evening, depending on where you are in the world. We are just about to start this webinar, but first I'm just going to wait for all the participants to enter from the lobby to the webinar proper. We've had a record number of registrants for this event, more than 1,300 registrants, so it's going to take a little while for everyone to come on to the Zoom session. Okay, so we have already several hundred people joining us, so I think it's time to kick off. Right, so welcome everyone. Welcome back to the latest webinar on the projects market in the MENA region. From MEED Projects, my name is Ed James. I'm the Director of Content and Analysis at MEED Projects, and today we'll be looking at the performance of the market in the third quarter of this year, then looking forward to the end of the year and beyond. We'll also be looking at some of the longer term challenges and opportunities facing the market, including some interesting points and trends which have come up in the last few weeks. As always, this presentation will be made available to you, and we are recording it, so it will go on YouTube at some point for you to watch again at leisure. We'll also, in the process of sending everyone who has registered for this webinar an email with the actual presentation on it, and you can then look at it, of course, in your own time afterwards. As usual, the presentation itself will take about 30 minutes, and then we'll have the second 30 minutes for any questions that you may have. If you have any questions throughout at any point during this webinar, please put them into the Q&A box, and then I'll hopefully get round to answering them if I can once this webinar is over. There's a lot of people on this webinar, so there'll be a lot of questions. So the earlier you put your question in, the better. Right, so without further ado, let's proceed with the first few slides. Okay. So first of all, just in case you're new to these webinars, this series of webinars on the projects market in the MENA region, and you don't know anything about MEED Projects. MEED Projects is an online projects tracking service. We're covering all major projects in the Middle East and Africa, Central Asia regions, currently covering about 15,000 live projects worth more than $10 million. And we have currently in the market more than $7 trillion worth of projects. So if you want to find out more about MEED Projects and how we can help your business in terms of finding business opportunities or analysis, please go on to meedprojects.com and learn much more about the system and the platform there. It's also worth noting that the vast majority of the data that you can find on this presentation today is sourced directly from MEED Projects. So it's by quantifying the individual projects themselves that we're able to quantify the overall trends and sizes and market shares of the market. Okay, I'll just very, very quickly go through the last 12 months, as I know that I've done this in the last couple of presentations, so you might all be familiar with this data, but I just wanted to highlight some of the trends of the last 10 years or so. So taking into consideration, particularly the last 12 months and the impact of COVID on the market, this is the value of contracts awarded in the MENA region over the last decade. We can see that unsurprisingly, the value of contracts in the MENA region fell by nearly 25%, nearly a quarter last year. So we fell from $150 billion or so in 2019 to $113 billion in 2020 as a direct result of the pandemic. And that's the lowest figure for the MENA region for about 20 years. So obviously it was a very severe year for the projects market. Unsurprisingly, a lot of contracts were delayed, projects were delayed, tendering was slower, and as a result, there were a lot fewer contracts awarded. And this is for the MENA region. This is for all the Middle East and North Africa countries. However, it's a similar story for the GCC. The GCC fell to just $68 billion of contracts awarded last year, a similar 25% fall on the previous year in 2020. But we can also see from this slide that overall contract activity has been declining since 2015, 2016 due to the fall in the oil price. You can see we had a peak in that 2013 to 15 period when oil prices were above $100 a barrel. But since then, and the oil price crash, the spending has been a lot lower. Now, just in terms of country spending, in 2019 and 2020, you can see that Saudi Arabia and the UAE were particularly bad hit. Saudi Arabia, as you can see, fell by a very considerable percent, by 53%, in fact, between 2019 and 20. And the UAE fell something like 32% on the previous years. These were the two worst affected markets. Unfortunately, they're also the two largest markets in the region historically. And so that's one of the major reasons for the downturn last year. However, we look at Egypt, Qatar, Iraq, Oman, Kuwait, Algeria, spending actually increased last year. So I think it's important when we're talking about the projects market and COVID-19 and the impact of COVID-19, it's important to note that it's not true to say or generalize to say that it hit every market the same. Some markets actually grew in 2020. It was only Saudi Arabia and the UAE which were particularly badly hit. And that's a similar picture and story for the sectors. So we see that construction fell, which is the largest sector in the region, fell the most last year from 53 billion to 38 billion. However, other sectors like transport, power, water were either stable or actually grew year on year. So again, it's important not to generalize. Depending on the sector you're active in, depending on the market you're active in, last year may not have actually been that bad. So another interesting piece of new data that we've done looking at the impact of COVID is project realization rates. So what we did here is we took all of the projects on the system at the beginning of 2019 and then at the beginning of 2020, and we looked at the projects in bid evaluation, i.e. where 10 bids have been already submitted, and then we looked at what percentage of those had progressed to contract award by the end of the same year. So in 2019, we had something like 667 projects in bid evaluation at the start of the year. By the end of 2019, 590 of those had moved to contract award. That's 88% of them. However, in 2020, although we had a little bit more at the beginning of the year projects in bid evaluation, actually only 412 of the 713 progressed to contract award. That's just a realization rate of 58%. So what we saw in 2020 was a considerable slowdown in projects moving from tender to contract award. And that's one of the prime reasons for the project delays last year and the slowdown in project activity. Of course, what that also means is that there's now a bigger backlog of contracts waiting to be awarded, because all these projects that weren't awarded last year should be awarded in 2021 or into 2022. Right, that's enough of the last few years. Let's take a look more recently at the third quarter this year and how the markets performed. Okay, so we saw just a few slides back the overall MENA contract awards. We're now into October, and so it's possible now to start looking at for the 2021 as a year as a whole and compare it with previous years to understand if the market is over the slump from last year and if it's recovering nicely. And the answer when we look at the overall picture is yes, to a certain extent, but not totally. So in 2019, we saw about $149 billion of contracts awarded. As we know, this fell about a quarter to just $113 billion last year. And so far this year, we're on about $102 billion of contracts awarded. So we are just behind all of last year's total. And with 3 months or 2.5 months to go, one would assume on a pro rata basis that we would overtake last year's number of $113 billion. So while we will overtake last year's number, we are not likely to hit 2019 number. In fact, we'll probably be a fair way off that. So the market does seem to have recovered somewhat this year, but not to the extent that we are matching 2018, 2019 levels, and certainly nowhere near what we saw in 2013, 14, and 15. Now, in terms of contract awards across the MENA region for selected countries this year, who are the leading markets this year? So interestingly enough, the largest project market year to date is Qatar, mainly due to the massive LNG contracts awarded beginning of the year. Qatar is the largest market so far and is likely to be the largest market for the year as a whole. And that'd be the first time that Qatar has taken that position. Next, we've got Saudi Arabia, then Egypt, Iraq, and then the UAE. And I guess the story of the last couple of years is the downturn in project spending in the UAE, which used to be the largest projects market, is still really struggling. And that's really on the back of the poor performance of the Dubai real estate market and the lack of new projects there, but also due to a decline in project spending by ADNOC in Abu Dhabi, which is also a factor. Now, looking at that, let's compare that same data over the last 3 years. You can see how each market is performing relative to past performance. You can see here Qatar, the leading market this year, far above the last 2 years, mainly, of course, due to the LNG program. Egypt, Iraq are fairly stable, flat year on year, and will likely beat last year's totals. Saudi Arabia too, with 2.5 months left of the year to go, is likely to exceed last year's number, but not by an awful lot. On the other hand, the UAE continues to disappoint. We've really seen this market, which until 3 years ago was the largest projects market in the region, we've really seen it slump, and it's been very, very challenging here in the Emirates. And this, again, is a major reason for the downturn in overall project spending levels. So mixed messages or mixed picture, mixed outlook for this year. On a sector basis, again, that same data, and again, construction, which is historically always been the single largest sector in the region. We've seen this market slump further to just over $20 billion for the first 9 months of the year, compared with nearly $40 billion previous year and more than $50 billion in 2019. So this downturn in construction continues. We see, although on other sectors, however, not such a bad performance. Power is going to be up year on year. Water also likely to be better, as will petrochemicals. Gas is, of course, well up due to the LNG program, but transport and oil are also down compared with previous years, and we'll see whether they manage to hit last year's numbers or not. So again, mixed messages and pictures for the different sectors. Okay, so here we are looking at the, sorry, I've done this slide already. Here we are. Okay, so let's take a look at the top projects in the third quarter of this year, what's been awarded in the last 12 weeks or so. We can see a couple of big refinery projects in Iraq. Kirkuk refinery to the Chinese, CITIC has won that for Al Rania as the developer. It's a private refinery. And the Al Fal refinery has also been awarded to CNCC out of China, which is also the developer of that project. We've seen the Atlantique Port Complex awarded, and recently in the last couple of weeks, we saw Guggenheim awarded to Trojan B6. It's a long-awaited contract. Now work is underway there. I won't go through each one of these contracts. You can look at these in your own time. And another further on, more list of projects. The top one is interesting. We've seen a raft of contracts awarded the last 10 days or so for the Saudi-Egypt Power Interconnection project. That's going to connect, Egypt and Saudi Arabia interconnected for the first time. It's a major evolution in the power market in the MENA region. And you can see a range of other significant projects awarded in the last 12 weeks. So life goes on, despite all the challenges we've seen in recent years. Life goes on. There are still contracts being awarded and tendered here's just a few of them in recent weeks. Okay, let's look forward. Right, so let's look at the current situation, short-term market in terms of current tendering activity and projects where bids have been already submitted and where bids are being evaluated and in theory could be awarded any time now. There are currently $43.5 billion worth of contracts in the MENA region under evaluation. By far and away, the largest segment of that is in Saudi Arabia, some $14 billion, and followed by the UAE and Qatar, Oman, Egypt, Iran, so on. And that, of course, is provides quite a positive picture for the short-term prospects of the market. One would normally assume that the majority of this total would be awarded over the next few months. So that indicates that there is still quite a healthy pipeline of projects in the market, and that the short-term outlook is still fairly positive, and we can be a little optimistic on the back of this. Now, if I take actual contracts for projects awarded year to date, which is in red, and then I add in the projects due to be awarded this year and under evaluation in black here, we can do a total for the year as a whole, and then we can have an estimate of how the projects market overall is going to end up for the year. You can see that Qatar, as I mentioned, is likely to be the largest leading market, leading projects market in the region at the end of this year for the first time ever. It's going to be followed by Saudi Arabia, then Egypt, UAE, Algeria, Oman, and Kuwait. And in total, when we do the numbers, we've got $149 billion of contracts awarded in 2019, obviously $113 billion awarded last year, big fall. And now if we add up the $103 billion already awarded this year, combined with the total value of projects under evaluation, we get to something like $127 billion worth of contracts awarded for the year as a whole. And so that would put this year somewhere between 2019 and 2020 numbers. Not a complete recovery, but nonetheless an improvement on the previous 12 months. So we are heading in the right track. We're not maybe recovering as fast as we might have hoped, but nonetheless we're heading in the right direction, and therefore the hope can be that in 2022 we can use this as a basis for driving on and improving further. Okay, let's take that same data again, but look at it by sector, and you can see here that gas is likely to be the largest largest sector this year when the year is ended, followed then by construction, transport, power, oil, water, and so on. Now, this will be the first time that construction is not the largest market in the region. This is quite a turn up for the books, and is something that I guess reflects the downturn in real estate construction spending in the UAE, but also goes to show how vulnerable this sector is has been to the COVID situation. Gas, on the other hand, thanks to LNG program in Qatar, is surging. Transport, one of the big success stories of the last few years. That's roads, ports, airports is doing very well. Power and water as well, which are two growth sectors, tend to be more stable, also considering their growth trajectory and general trend of the last few years. Just a reminder before we move on to the next slide, please put your question in at any time into the Q&A box. I'll get around hopefully to answering your questions at the end of this session. We'll save some time for Q&A. And also just a reminder that you should be receiving in your inbox this presentation itself for you to look at in your own time, and also that the fact that this presentation is being recorded, you can also be able to look at it on YouTube once it's uploaded. Okay, so we just looked at the projects in bid. What are some of these individual projects currently under evaluation? Well, here's just a flavor of some of them. We've got the subsea power transmission network in Abu Dhabi. I think that's called, also known as Project Lightning. Polypropylene plant in Egypt, the Unsafe gas cap project as well. We've also got the LNG terminal in Sohar, in Oman, and a range of other significant contracts which are under bid. Bids have been submitted, and we could feasibly see them being awarded by the end of the year. Next page, some more of those. You can see we've got various different projects across different markets and sectors, all of which provide a lot of opportunities. And as I said before, life goes on, work is still being tendered, bids are still being submitted, and there's still contracts being awarded. We should see these move from bid to award over the next 3 to 4 months. Okay, longer term. So when we're looking longer term at the prospects of the market, I think it's important to just look at the economic picture. Obviously, strong economic growth tends to result in strong projects market growth. You can see these red lines here, all negative for last year. As we all know, the economy, the global economy, as well as local economies, all had a very difficult 2020 of lockdowns, obviously affecting the economic performance. The only market actually to emerge with some credit last year was Egypt. A very strong economic growth in light of COVID, driven mainly by very strong population growth. And I think you can't stress enough that population growth really does lead to projects market growth. And I think Egypt's a great example of that. On the other hand, although we saw 2020 being quite a miserable year for economic growth, the IMF is expecting a return to growth levels over the next 3 to 4 years. You can see each market is expected to show strong economic growth above 2%, as high as 6% over the next few years, which is obviously also encouraging for the long-term performance of the market. Now, just in terms of what are the major project market drivers for project market activity going forward, I've discussed these before, but I think it's important to stress them again. As I mentioned, high population growth is a key major driver for project activity in the region. When you've got strong population growth like you do in Egypt, where 2 million people are being added to the population pool every year, you have very strong demand for additional power and water investment, for social infrastructure investment, for things like schools, hospitals, universities, affordable housing, and so on. And so that in itself, going forward, when we're looking and projecting the market, that's a critical driver. Something that's a new driver that's come up in recent months, particularly in the last year, is this energy transition into a hydrogen economy. Obviously, the growth of the renewable energy market and so on. We've seen a raft of contracts announced or projects announced in the hydrogen market. It's a very exciting new sector, and this is certainly going to be a core component of projects market going forward. Also, point 4 I want to look at and touch on, that's the long-term government visions, whether it's Saudi 2030 vision or Qatar 2030 vision or Oman 2040. These visions, create frameworks for project market investment. You just have to look at the Sharik program and the Saudi National Investment Strategy that's come out, all within the framework of the 2030 vision. And these are driving long-term policy goals and investments into projects. And you need to look much further than these frameworks for understanding these visions, for understanding how the projects market is going to perform longer term. I also want to touch on point 6, which is the Belt and Road Initiative. The Chinese investment has come in very strongly into the region after quite a few years of delay. We're now seeing Chinese investment come in very sharply. Chinese contractors bringing finance, but Chinese developers investing key infrastructure and manufacturing projects across the region. Duqm, for example, is really a hotbed of Chinese investment. And this is also in itself helping provide momentum and impetus for projects market activity in the region. Right, so I'll want to take one of those points we just touched on, which is the hydrogen market, hydrogen sector. As I mentioned, it's the last few months, we've seen a raft of new hydrogen projects awarded. And we've created a new section on MEED projects for hydrogen projects. Here's just a few of them that we're currently covering. Obviously, the first one was the Helios Green Fuels project in NEOM, which Aquapower products are helping to develop and investing in. They are, that's a very significant one, really the pioneering one in the region. But since then, that's been announced. We've also got a number of hydrogen projects announced in Oman, particularly in Duqm. I saw one today just announced in Salalah as well. And Kizad as well in Abu Dhabi is also going to be a major hub for hydrogen project activity. Clearly, a lot of these projects are geared towards producing ammonia for export, where the ammonia would then be converted at the destination back into hydrogen. And there isn't a sign yet of a significant hydrogen network or market within the region itself. However, I'm sure that's going to come. But nonetheless, this is certainly a big growth sector, and I expect to see many more projects added to this list in the weeks and months to come, and certainly worth looking at. Okay, so we talked about the key opportunities and the drivers of the market, but now let's also take a look at some of the challenges. And I think it's important that we evaluate these because these are pressing concerns that affect companies every day. So we still, well, something that we've seen over the last 5-6 years, but something which has accelerated in the last 12 months, primarily due to COVID, is this issue around delayed payments, late payments, or even no payments in some cases, and the impact this has on cash flow, company cash flows. Obviously, we've seen a number of very high-profile bankruptcies and issues with companies. Arabtech, of course, is the most famous one. But more recently, we saw trouble with one of Dubai's major contractors being the Gulf more recently. And companies are still struggling getting payments on time. Invoicing terms and payment terms are being spread out longer than ever. And for many companies, this is a very real, very live challenge that could be an existential challenge to their business. So this is certainly still a major challenge for companies and contractors and suppliers in the region. Likewise, slow decision making. So we saw earlier in that slide around project execution or realization rates. We've seen a lot of delays around pushing ahead with projects, and this clearly results in fewer opportunities coming to market, fewer contract awards, which in turn leads to a shrinking market, which of course creates problems. There aren't as many business opportunities as there were before. This is clearly a problem for companies. We've also, of course, seen very well publicized increases in raw material costs, in logistics costs the world over, and of course, key imported equipment, materials. This is also a major problem, and it's going to, if the market does pick up, which it's likely to, this is only going to be exacerbated going forward. So this is obviously a problem for many contracts on a lump sum basis, which are going to be hit by higher transport costs. Likewise, there's an increasing focus on localization rules, whether that's amortization or standardization or in-country value rules. This obviously adds greater costs to companies. We've also seen tariffs imposed on materials and goods from the UAE into Saudi Arabia. We've seen Saudi Arabia impose a rule that by 2024, companies must have their regional HQ in Saudi Arabia. We've got lots of sort of localized rules which do add cost pressure to companies. And this is something that many companies are trying to grapple with and come to terms with. And of course, as you get smaller markets, as you've seen in the last couple of years, you get increasing competition, which in turn leads to lower prices, which in turn leads to smaller margins. And then when you add in higher costs, then you have a recipe for quite a dangerous recipe for companies. So this is all all of pressing concern to companies, and that's something that all contractors, suppliers, and consultants need to bear in mind. But most of all, I think, is what we call good problem to have, which is what I believe and what I can see is going to be a looming bottleneck and potential crunch in the projects market in Saudi Arabia. And I'll show you why. The next slide here. So you may have seen in the last few weeks and months a number of announcements coming out of Saudi Arabia. And the latest one, of course, is a Saudi National Investment Strategy, the foreign direct investment push as well, the acceleration of projects and NEOM and the other PIF giga projects. And you can see just here a few headlines. For example, we saw on MEED.com just this week, Diriyah Gate to award $8.9 billion worth of contracts in 2022. So that's currently more than a quarter of the total annual contract awards in Saudi Arabia. So one client alone is going to award that much in 2022. I heard earlier this year, Roshan, the affordable housing PIF subsidiary, announced they were planning to spend $42 billion by 2025. That's 35 billion riyals a year, starting next year and ramping up to 50 billion riyals in 2025. NWC as well announced it was going to spend $38.7 billion in the water sector in 2025. And then with this national strategy just announced, we see the targets for the country, the kingdom, to attract FDI of $103 billion by annually a year by 2030. Now, all these, and this is just a highlight of just some projects. All this points to a very significant acceleration and ramp up activity in project market in Saudi Arabia. And so you can see in the top left-hand graph, we saw $281 billion of contracts awarded in Saudi Arabia between 2011 and 15. Once the oil price fell, we saw that decline substantially to 172 billion between 2016 and 21. Now, if we total up all of the PIF giga project spending plus all the other project spending, if we factor in all the announcements as well, over the next 4 years, because we're now at the end of 2021, we can expect the 2021 to 2025 number ostensibly to reach $569 billion over the next 4 years. That's a 230% increase in the kingdom alone. Now that's got full political backing. It's being pushed by the PF and at the highest levels to deliver these projects. And so that indicates, even if not all of these projects happen and happen in that time frame, that indicates a very significant ramp up in spending, but it also indicates a very significant squeeze on resources, on logistics, on manpower and engineering capacity, on contracting capacity, and could result in a very severe bottleneck, or could result in very severe problems for the supply chain in Saudi Arabia. Now, I know the authorities are looking at this. I know there have been bodies set up to try and coordinate among the different clients in the kingdom, but nonetheless, this creates, this is a good problem to have, because it's a result of increased project activity. It could result in quite a severe bottleneck and shortage in various areas of the market. So it's something to look at and something to consider, especially as I know most companies are now looking at Saudi Arabia, or have already entered the market and looking at it very seriously. Okay, longer term future pipeline. Okay, so we've had a few difficult years. Between, as it low 5 years, have been, the market's generally been in decline, of course, accelerated in the last 2 years because of COVID. But looking forward, we've still got a very optimistic pipeline, $3.5 trillion worth of contracts planned and unawarded in the MENA region. Now, even if only half of those actually are realized or come to fruition, there's still a very significant $1.75 trillion worth of projects. And that compares very favorably with the $1 trillion plus of projects awarded over the last decade in the MENA region. The largest single market is Saudi Arabia, led of course by NEOM, but even if I took NEOM off this number, it'd still be by far the largest projects market. Slipping back somewhat is the UAE, just over $600 billion of future contracts. Then Egypt, $400 billion. Iraq, about $370 billion. In Kuwait, $200 billion. Iran, under that, and so on. So we still have a very healthy long-term pipeline of projects. In terms of that same data, but in terms of the split by sector, can see the largest single segment, as it has been historically, is the construction market, nearly $2 trillion worth of contracts. We then have the transport market, about $500 billion known future projects, and power, 300 billion, oil, 235 billion, gas, 214 billion, and so on. Again, a very broadly diverse mix of projects coming forward across all the different markets. And so we can still have a fair amount of optimism for the long-term prospects of the market, despite some of the recent challenges. Okay, so just to finish off towards the end of this presentation now, please get ready with your questions. When I finish, I'll answer them. I wanted to look at a macro or top-down look at the MENA market compared with elsewhere in the globe. So everything we've seen so far is a bottom-up approach. Basically, all the data you've seen is the aggregation and summary of thousands of individual projects. Now we're looking top. This graph shows a top-down picture from national statistics by each country on the contribution of their construction sector to the economies in each of the regions. This is what we call the construction output. And you can see here the Middle East in this sort of dark red here is set to grow from an annual output of about $475 billion this year to $567 billion by the end of 2025. That's quite significant growth, which alongside Sub-Saharan Africa is the fastest growing segment. But you can still see that the Middle MENA region and Africa combined are still only a fairly small share of the overall construction output. Of course, you've got much larger economies and populations in other parts of the world, so it's not surprising. But by 2025, when we combine MENA and Africa, it will be larger than the South Asian projects market. It'll also be larger than Latin America. So and Eastern Europe. So it's a market that is growing fast and is becoming more and taking a larger share of the global market over the next few years. All right, and last slide, which is the just long-term projects, just to give you a flavor of some of these long-term projects. What are some of the big ones coming up? We've got Entertainment District in Egypt. We've got Metro in Kuwait. We've got new airport in Bahrain. We've got a new world-scale refining petrochemical complex in Sokna in Egypt. Public affordable housing across the in various countries. So you can see here many large projects across different markets, across different sectors, just to give you a flavor of what some of those longer-term projects. Okay, so that's it in terms of the PowerPoint presentation I'm giving today. I'll now move on to answering any questions you might have. Just a reminder, if you do have any questions, please type them into the Q&A box. But also just a reminder that this presentation is being sent to you as we speak, so you can look at it in your own time. We are also recording this presentation, and you'll be able to look at it on YouTube when you need to. Okay, so I'm just going to open up the questions and I'll take a look. All right, so the first question is an interesting one. It's about Chinese contractors in the MENA market. And actually, this is a very interesting question because actually one of the major trends of the last couple of years is the emergence of the Chinese contractor community. And the fact is now that the Chinese contractors are the dominant players now in the contracting market in the GCC and wider MENA region. Last year and the year before, in terms of the total value of projects, Chinese contractors won more than 24% of the total value of contracts in the MENA region. So what we've seen compared with say 2 or 3% from about a decade ago, even just 5 years ago, we've seen now the Chinese come in, the Chinese contractors come in, they can bring finance with them on projects, they can help finance develop projects, and they've shown that they're capable, they've got big major experience now, and they're coming in and they are, just like the Koreans did 10, 15 years ago, and the Japanese contractors did before then, they're coming in and taking a large slice of this market at the moment. And if you go to somewhere like Africa, then it's something like 50% of all major contracts are being awarded to the Chinese contractors. So that's a major trend that's emerged, is of Chinese companies coming in and winning a very large proportion of work. So last year was about 24% of total value of contracts awarded was to Chinese contractors. Another question here, perennial question. When is Hale and Gasher expected to be awarded, along with Dalma and Sheikh? Well, as we all know, the hope was that Hale and Gasher would have been awarded either late last year or earlier this year. Unfortunately, ADNOC decided that it wasn't happy with the bids and has re-tendered the FEED for the project. So we are waiting for the FEED to be awarded, and then we are going to have to wait a few months for the FEED to be prepared, and then for the tenders to be issued to EPC contractors. So I wouldn't expect Hale and Gasher to be awarded until at least the second half of next year at the earliest, and probably not until after that. On the other hand, Dalma is at a much more advanced stage. I expect to hear good news about NPCC on the offshore portion of Dalma soon enough, and I believe, I think it's TR, is it, on the onshore portion? I can't quite remember, but I think we'll see contract awards on those two packages very soon, if my memory is not mistaken. Likewise, with Sheikh, I wouldn't be surprised if we also see contract awards for that, the gas cap project, also over the next few weeks and months. So Dalma Gas and Sheikh shortly, Hale and Gasher not for a while, I'm afraid. Can you explain the expected jump in 2022 in all markets? Well, reason why we're optimistic for 2022 is that we've got a large backlog of projects that weren't awarded in 2020 and 2021. So we are seeing these all back up, and therefore the value of work in tender is very high, and therefore that leads to an optimistic or positive expectation for 2022. We are now on an upward trend. We should expect that trend to continue, especially as now oil prices are above $80 a barrel. That certainly also helps, and that paints that rather positive picture for 2022. Of course, as I showed in the previous slide, just Saudi Arabia alone could have a potentially massive year or massive next 5 years if all goes to plan there. So that can also help contribute to those 2022 numbers. Right, question here about sports projects, stadium projects in particular, like Qiddiya and the Olympic project in Egypt. Any news on those? Well, the projects are moving ahead of schedule. Qiddiya is a fast track project that's due to be completed by 2024, so it can be open to open by that time. So that's progressing well. As a part of the PIF program, and that's one of those big projects that's going to contribute to this big ramp up in activity in the kingdom. In Egypt, the Olympic project is also going well. We've got the indoor swimming pool. We've got the other indoor complexes as well underway. The stadium too is almost nearing completion. So they're proceeding quite nicely. And just talking about Olympics and sporting events, well, there was news today that UEFA is trying to push for the World Cup in 2030 to be hosted jointly between Israel and UAE. So that could be an indicator of something that's going to come. And I wouldn't be surprised if the 2036 Olympics, if someone makes a bid for that in the next couple of years. So I think that's going to be something to keep an eye on. Question here about PPP. Is it becoming a reality? What are the prospects for PPP in the region? Well, earlier this week, there was a major PPP event in Dubai, and Dubai announced something like 25 billion dirhams of PPP projects, including the Hanging Gardens footbridge, the Sunset Beach development, and a number of transport projects as well. In terms of other PPP projects, we saw last year the award of the first PPP schools program in the region in both Qatar and Saudi Arabia. We've got the first hospital PPP also in Saudi Arabia. So things are looking bright for the PPP market. However, in terms of transport directly, well, we're still really yet to see a major PPP project in the transport sector in the region. And until we get that first one, it's difficult to make a prognosis or get a view on it. But by all indications, this new King Hamad Causeway between Bahrain and Saudi Arabia, which is going to be implemented on a PPP basis, this looks to have a lot of investor interest. And I suspect that this is going to be a big success story for PPP and will act as a pioneer other PPP projects in transport going forward. We've also got the Salalah truck road, Salalah Thumrait truck road project of PPP. And we see RTA talking about potentially red and green lines, metro lines being extended on a PPP basis. But it's not going to be easy, all right? We need to have strong demand figures. You need to have proper risk allocation. And if projects don't have these two key factors, then they're not likely to succeed. So we're going to have to wait and see and wait for more projects to come out and see how they proceed. Question here about coal projects after many regions reporting coal power shortage. Well, there are only, as far as I'm aware, only 2 coal projects in the entire MENA region. One is in Morocco, Jorf Lasfar, and the other one, which is opening soon, is the coal project Hassyan, the IPP in Dubai. Especially after the news coming out of China that they're not going to finance any more overseas coal projects. And given the general direction that the world economy is taking with regards to coal-fired production, I do not, in the foreseeable future, see any future coal projects coming up in the region. So I think we've got 2, and I think that will be it. In fact, if anything, we're going to see more and more push for renewable energy. Solar power is proving particularly effective and cost effective here in the region, and I just see us pushing more and more in that direction. We might see nuclear power, particularly in Saudi Arabia. Obviously, Egypt is building its nuclear complex. Jordan might well do so as well, and it looks like Saudi might too. But I don't really see a bright outlook for coal in the region going forward. Question here about digital transformation. So this is a very sort of interesting topic because it's something that a lot of people are talking about. So the digitalization or digitization of the construction industry, things like 3D printing, Internet of Things, digital twins, drone technology, and robotics technology. This really is something that a lot of people are talking about and are trying to introduce on projects to improve efficiencies, reduce timeframes. And this is something that is going to become more and more commonly applied on projects. However, I would say there is still quite a considerable gap between what is talked about and what is actually happening on projects. And you know, sometimes the introduction of technologies can make things more efficient, but it can also increase costs. And unfortunately, we still have a mindset that where projects tend to be driven by costs. And until we get codified that projects have to adopt certain technologies or digitization in one way or the other, then we're still going to have this situation where it's going to is a kind of obstacle to the widespread adoption and embracing of digitization, digital tools. So it's definitely getting momentum, and I expect to see a lot more of it going forward, but we do need to see that shift in mindset as well. Do you have granular data per country that we could have? Well, obviously there's a lot of high-level data in this presentation, but obviously if you want the granular data, then the MEED projects platform and database has all the data you could want on an individual project level basis. So if you do want to have granular data on each individual project, then I suggest obviously a subscription to MEED projects. Check it out at meedprojects.com. That should provide you all that sort of granular data that you require, not just for business opportunities, but also for analysis. a question, as I often get, about the oil price, and my answer is again non-committal. Obviously we've seen the oil price rise to its highest level for some time, above $80 a barrel in recent weeks. It's very positive for the region. But then we've also got to remember that costs, or the overall costs for each economy or governments, have also increased in recent years. So what we want, if we're going to return to those 2014-15 levels of project spending, we really need the oil price to push well above $100 a barrel. Whether or not that's ever going to happen again there's a question mark about that. But of course, as long as if oil is staying above $80 a barrel, then there's still very good prospects for the projects market. But as we've seen, anything less than 60, even $70 a barrel, then that really acts as a hindrance to projects market activity. So we need it to be above $80 a barrel, basically, and we need it to be above what it is currently. Not much focus on the Kuwait market. What are the prospective projects in the pipeline for the Kuwait market? Well, the Kuwait projects market is unfortunately been a long-term underperformer. It's always tended to punch below its weight, unfortunately, despite its large economy and oil production. Obviously, political challenges in the state have prevented many projects from proceeding and going to market. It's difficult to see a substantial change in project activity for the Kuwait market until there's a political resolution to some of the inherent challenges facing the market. So we've been running around $4 to $5, $6 billion a year for Kuwait. Its potential is much higher than that. After all, it does have an economy and a population similar to that of Qatar. It should be performing at the same rate as Qatar, but unfortunately, it just seems to be continually held back. So I guess the future big project in Kuwait everyone is waiting for is the big petrochemicals complex with KIPIC. There's obviously the Jurassic project for KOC as well. There's some of the port modernizations and the affordable housing projects as well, but nothing to get very excited about. And of course, the PPP market still really hasn't found a solution to some of its problems and how to proceed with some of the PPP projects on a PPP basis. So it's going to remain a market that's going to be challenged until something changes there. What do you think about the UAE market? Do you think it's going to get back on track for the construction industry? So that's tied in. That ties in with the real estate slump in the UAE. So we've seen prices in the last few years fall. We've seen oversupply of property, particularly in the apartment space, and that's resulted in fewer projects coming to market. And that's one of the main reasons why we've seen the market fall in recent years. However, with COVID, we've seen a much increased demand for villa and townhouse projects. We've seen prices rise for those two segments of the market as well. We've seen a couple of project launches this year, which have been sold out within hours. And so there is some sign that in that segment, the villa, the townhouse, I mean, there is a few more projects coming back into the market. We've seen also a few high-end tower projects coming back. So there has been some small growth in the market, but nothing like we need in order for the levels to return to pre-2017-18 levels, unfortunately. So what the problem with UAE is quite simple. There isn't enough people. We need more people in the UAE in order to drive demand for property, which in turn will drive launch of new projects. And until that happens, it's difficult to see the construction industry in the UAE recovering or going back to what it was. Yes, we might see some small recovery, but we are not going to see the return to those previous years unless we get a substantial change in the demand for real estate in the Federation. Just reading through your questions. Question about the oil price break-even points. I think sometimes when we're looking at the oil price, yes, of course, there is a correlation between the oil price and general projects market activity, as we've seen in the last few years. When the oil price fell in late 2014, over the next few years, we saw project spending also decline. However, we can also look at a country by country level. It's not always the case that oil price is the major factor for projects market performance. So somewhere like, as I said, somewhere like Egypt, strong population growth. In somewhere like Kuwait, it's political issues. In UAE, it's real estate demand. So we can't put too much dependence or reliance on the oil price as a factor for project market performance when looking forward. However, as I mentioned earlier, I think we do need oil to remain above this $80 a barrel figure, and preferably above $100 a barrel if we really want to see a return to those levels seen before. There's a good question here about the current price rises and inflation in raw materials and logistics and freight rates. Do I think that the inflation in prices and raw material prices and equipment and freights and logistics will result in a slowdown in project activity? Well, it certainly could, yes. I mean, if contractors start factoring in inflation for materials and equipment and in their bids, and then clients get alarmed by the increase in prices, then yes, there might well be delay in these projects, waiting for the market to cool. I mean, we saw that very, very clearly in 2007 and 2008 in the oil and gas market, when the inflation in materials, equipment, manpower, and engineering saw EPC prices soar. And we saw new project activity in the sector slow to a minimum, only to really increase and, well, actually explode in 2010, 2011, when the global credit crisis saw the prices fall quite considerably. So I mean, it's definitely a factor, yes. However, if we look at, say, some of these projects in Saudi Arabia or projects in Egypt, for example, these are being driven very much from the top level by the government. There is a pressing desire to get these done by a certain time frame, and they would therefore seem to be immune somewhat from price inflation, as the political priority delivering them is greater than their cost priority. We'll just have to wait and see. And see what happens there, and see whether, and I don't believe it's happened yet, whether this increase in prices have been fully passed on in terms of contract prices for the main construction contract. But we'll see, and it'll be interesting to take a look over the next 12 months. Someone's asked, can you explain the big number for Northeast Asia in your longer term forecast slide, please? Yes, Northeast Asia, of course, is China, as well as Korea and Japan. So clearly China is the world's largest construction market. So that's why it accounts for this biggest chunk of spending. It's $5.5 trillion. Okay, next. Question here about the announcement from Saudi Arabia earlier this year about companies having to set up in their HQ in Saudi Arabia if they want to bid for government projects. What do you think this impact will have? So I haven't seen as of yet any companies commit to moving their HQ at this stage. Obviously, there's still 3 years left for that to happen. But it will. I think it's inevitable with the downturn in the UAE market, with this potential explosion in activity in Saudi Arabia. I think it's inevitable that there will be some companies moving their HQ following the work into Saudi Arabia. And the Saudis know what they're doing. They are building the infrastructure, the schooling, the retail elements, the transport infrastructure, the regulations and policies to make it a more attractive place to live and to invest and to work in. And it's not just about saying we've got a big market and we want everyone to come here and have their headquarters. It's also about making it a place where people want to come and live. And And that combined with this mandate, combined with the market, which is growing, and which is set to really, as I said, increase over the next couple of years. We've seen in this webinar. I wouldn't be surprised if many companies start moving their operations or HQ to the kingdom. Of course, there are ways around this. Of course, I'm sure there'll be certain fudging of this. You can name your office in Saudi Arabia as HQ, for example, but continue most of your operations out of the UAE. But nonetheless, this reflects the Saudi government's seriousness in saying, hey, we are the biggest market, we are the biggest economy, we're the biggest population GCC. Therefore, it's only right that companies have their HQ here. And I think we'll see more progress on this and better clarity on this over the next few months and years up to 2024. I've got a question here about Oman. I see that Oman increased its contract awards in 2020 compared with 2019. Do you have any studies showing how many of those projects actually commenced? And actually, that's a good question. We have in the last few years seen a number of projects across GCC and MENA awarded, but not actually start. And for various reasons, whether it's cash flow, whether it's final approvals and sign-offs. And at the same time, we've also seen projects start, but really not progress, even after starting, going very, very slowly. And to understand that in more detail, I guess it's important to maybe look at the data in more depth in MEED projects. You can get that data by looking at individual projects, and that might be something that we'll look at for the next webinar when we look at maybe not just project realization rates, but project start rates after award. Question here about PPP projects in Kuwait. Will they move ahead next year? Well, I mean, if I was being pragmatic, as I mentioned earlier, these PPP projects have been in Kuwait now for what, a decade without movement. I mean, we have seen the Hayman wastewater treatment plant come to be successfully awarded this year. But pragmatically speaking, there's really no significant change or indicator that would say we should expect these PPP projects to move next year in Kuwait. I would love them if they did, but if we're being realistic, I don't think we can expect them to. Another question I get very often is about the, both the World Cup and Expo, is what happens in the UAE and Qatar after the Expo and the World Cup finishes? How does it affect construction? Well, I certainly think I think that the issue is perhaps more pertinent in Qatar, because spending in the last 5 years in particular in Qatar, has really been driven about creating that transport infrastructure for the World Cup. And once the World Cup is over, there really is less of an incentive, or there's less reason to invest so much and so quickly in infrastructure in the state. So I think that the end of the World Cup will see a potential slowdown in construction activity in Qatar. However, this might well be offset by the LNG program, massive $20 billion project awarded this year. We saw the same thing happen in 2003, 2004 in Qatar. When these contracts were awarded, it created a mini economic boom in Qatar. And I wouldn't be surprised if the current round of LNG spending creates a similar economic boom, which could again spur or result in greater construction activity. So World Cup was obviously, the ending of that will be offset hopefully by the LNG program. In regards of Dubai and Expo, well, Expo was only ever a small component of overall project spending in UAE historically. So I don't think it's being over would have a dramatic impact on overall spending levels in the Emirates. So I don't expect there to be a huge impact on that. Right, I'm running out of time. I've been going for an hour now, so I will maybe just take one more question. A question here about data centers. Now, data centers is interesting. It's a real growth area. It's something that people talk about increasingly so. Obviously, we've got the Amazon Web Services, AWS projects currently live in the region. We've got another, obviously, companies like Etisalat and Do, Hasna as well with their data center plans. So data centers definitely a growth area and something that's worth I would suggest all companies to look at. We've seen the first, we've seen Sudlows now with the first solar power data center, also with DEWA and Huawei here in the UAE. I think it's a very fast growing market, and I would urge all many companies in this space to look at data centers as a potential area of diversification and look at, because I think it is one of those areas which is going to grow. Right. Okay. Well, I'm afraid I've run out of time. I'm afraid I haven't been able to answer all of your questions, but I will try to take a look at them afterwards and see if I can directly get in touch with you to answer them. If I have this time. If not, of course, feel free to get in contact with me directly. You can see my email address, my email address and my telephone number below. If you need to get in touch with me, please do so. So that leaves me just to say thank you very much for your attendance today and for your questions. I hope you found it useful, interesting. And I look forward to having you all again at the end of the year, where we look at the year as a whole, but also start providing some forecasts for 2022 and beyond. Stay in touch, stay safe, and we'll speak again soon. Thank you very much.